Analysts are sounding the alarms. The burn trackers are lighting up like fireworks on a quiet night, and deep in the chain, millions of Shiba Inu tokens just vanished into the ether. But what does this mean for the dog that's been pacing the floor? A surge in burns kicking off November. Could this be the spark for a weekly rally? Let's dive into the fire. According to recent data, over 11 million Shiba Inu tokens met their end in the last day alone. The rate exploded by nearly 1,000%. Whales watch. Holders hold breath. The story unfolds now. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. Shiba Inu enters the first full week of November, with a price hovering at 960 units, reflecting a slight dip from the weekend's highs around 1018 units as per live data. The 24-hour trading volume clocked in at $205 million, showing a healthy uptick of over 75% from the previous day, according to reports. Market capitalization stands firm at over $5.7 billion, underscoring the token's enduring grip on the meme coin sector. Sentiment leans cautiously optimistic. Community trackers reveal a bullish score, climbing to 62 out of 100, fueled by burn hype, though broader market jitters from Bitcoin slide below its 200-day average temper. The excitement, as noted in analysis. The core of this November narrative is a blistering burn event that has the Shiba Inu ecosystem buzzing. In the past 24 hours, the burn rate skyrocketed by 957.9%, with 11.3 million Shiba Inu tokens permanently removed from circulation. This is an isolated flare-up. It's part of a weekly surge where burns jumped 139% compared to the prior 7 days, signaling a deliberate push toward deflationary pressure. Picture this. As October wrapped with sluggish activity, November opened with a bang. 1 million tokens torched right at the month's dawn, setting the stage for what community watchers are calling a weekly surge in token destruction. These burns, executed through dedicated mechanisms like transaction fees on Shibarium and community-led initiatives, chip away at the total supply, now down to approximately 585 trillion circulating tokens after cumulative burns exceeding 410 trillion since inception. Sources suggest this spike coincides with heightened network usage and strategic wallet disposals, turning potential sell-offs into supply squeezes. It's a tale of transformation, from meme origins to a calculated burn machine, where every token singed is a step towards scarcity in a sea of abundance. Data paints a vivid picture of this burn frenzy. The platform logs the 24-hour burn at 11.3 million tokens, a 957.9% leap that outpaces recent averages of under 1 million daily. Weekly figures corroborate the momentum, with 139% growth in total burned volume, reaching over 50 million tokens across the past 7 days. On-chain evidence shows multiple high-volume burn transactions, including a cluster of 8 million tokens in a single session tied to ETF filing buzz. Tokenomics breakdowns from official resources further reveal that burns now account for nearly 40% of Shibarium gas fees, with over $1.2 billion in tokens facilitating these reductions. Community trackers confirm no anomalies, just pure, protocol-driven deflation, with the total burn tally now at 410.7 trillion tokens, up from 410.5 trillion a week ago. Analysts are dissecting this burn surge with keen eyes, viewing it as a double-edged sword in Shiba Inu's volatile world. Experts note that while the 958% jump reduces supply amid a 6% price dip, it could catalyze a rebound if paired with Bitcoin stabilization. Crypto analyst highlights 3 key resistance levels, 1080 units, 1200 units, and 1350 units, as potential upside targets if burn momentum sustains. On the tokenomics front, reports point to a 1,993% burn increase in recent weeks as evidence of maturing deflationary mechanics, potentially halving circulating supply by 2027. However, skeptics warn that without ecosystem traction, these burns might fizzle into noise, urging a 35% downside risk if support at 620 units breaks. Overall, the consensus tilts toward bullish deflation as the narrative driver, provided macro winds don't howl too fiercely. The Shiba Inu community erupted in a mix of cheers and cautious speculation following the burn announcement. Lead developer hinted at burns building bridges, alluding to integrations without direct confirmation. Influencers celebrated the explosion in late October as a precursor, rallying with calls to hold through the heat. Coverage captured developer responses emphasizing community-driven burns via Shiba Swap, with over 5,000 wallets participating in the latest wave. On forums, threads surged 40% in activity, with users debating ETF implications post-filing. Whale watchers reported minimal panic sells, instead noting 20 large holders redistributing to burn addresses. The vibe? Electric anticipation, holders framing this as November's ignition, while devs stress sustained engagement over hype. This burn surge hit the market like a controlled blaze, scorching supply but singeing price in the short term. Shiba Inu shed 6% over 24 hours, dipping from 1018 units to 960 units as broader crypto tremors from Bitcoin's 200-day average breach rippled through per data. Trading behavior flipped defensive, volume spiked 75% to $205 million, but 60% of that flowed into spot buys on major exchanges. On-chain metrics show exchange inflows dropping 15%, suggesting holders are locking up rather than dumping. The burn's deflationary punch offset some losses, with open interest on futures climbing 12%, signaling bets on a snapback. Retail frenzy peaked with searches for Shiba Inu burn, hitting a 3-month high, driving a 20% uptick in social mentions. In essence, the market absorbed the heat. Price wobbled, but conviction hardened, positioning Shiba Inu for a potential phoenix rise from these ashes. Looking ahead to the next week through the month's end, forecasts point to a modest rebound fueled by this burn momentum. Projections show a 15% climb to 1139 units by November 30th, driven by sustained burns and ETF filing echoes. Models estimate the 50-day SMA rising to 1040 units by month's close, assuming no major macro shocks. Sentiment indicators suggest a fear and greed index hovering at 55, ripe for a greed flip if daily burns hold above 5 million tokens. Trading-wise, expect volatility around key levels, support at 900 units, resistance at 1080 units. If transaction fees accelerate burns further, we could see 10 to 20% weekly gains, a classic short-term story of supply crunch meeting demand whispers. Over the next 1 to 3 months, Shiba Inu's trajectory hinges on burn consistency and ecosystem synergies, painting a canvas of calculated ascent amid lingering bear shadows. Experts forecast November's minimum at 1,000 units, peaking at 1170 units, with December and January building to 1,200 units average as burns compound. This aligns with projections eyeing a 208% burn ripple from ETF News, pushing toward 1,300 units by year-end, contingent on Bitcoin's post-halving rally. Tokenomics play a starring role, with 40% of fees now fueling burns. On-chain data anticipates a 15% supply trim by February, potentially amplifying price elasticity. However, risks loom. Reports warn of range-bound trading if open interest stays low, capping upside at 1,100 units unless developer activity surges 30%. Community sentiment could tip the scales. A bullish 70 score might ignite FOMO buys, while dips below 50 invite 20% corrections to 800 units. Midterm, it's a narrative of endurance burns as the steady drumbeat, ecosystem as the crescendo, with 20 to 30% gains plausible if macro tides turn favorable. Analysts emphasize patience. This isn't a sprint but a marathon where deflation meets adoption, potentially rewriting Shiba Inu's chapter from meme survivor to mid-tier contender by Q1 2026. The data whispers opportunity, but the charts demand vigilance. Watch the burn rate like a hawk, for it could be the thread pulling the entire tapestry upward. Zooming out to 3 months through 3 years. Shiba Inu's long-term projection sketches a bold evolution from burn-fueled scarcity to utility-driven dominance. Forecasts predict 2026 averages around 637 units opening, climbing to 708 units by mid-year, with 2027 highs at 1,000 units as cumulative burns eclipse 450 trillion tokens. Extended models eye 2028 at 133 units average, a minimum of 128 units, banking on scaling to 100,000 daily transactions. User consensus forecasts 1,300 units in 5 years, propelled by metaverse integrations and potential listings. Risks include regulatory headwinds, but upsides from Layer 2 maturity could multiply market cap to $20 billion by 2028. It's a vision of transformation, burns as the foundation, adoption as the spire. Shiba Inu's ecosystem pulses with fresh life this November, anchored by the network's pivotal upgrades that ripple through burns and beyond. The Layer 2, after a 2-week security overhaul announced by the team, now boasts enhanced decentralization, slashing single-point failures and boosting validator resilience, critical for scaling burns via gas fees. Transaction volumes hit 1.2 million in the last week, directly funneling 40% into token incinerations and amplifying the 139% weekly surge. Metaverse ambitions shine brighter. The NFT marketplace expanded with 500 new assets, drawing 15,000 unique wallets and tying into burn mechanics for in-game rewards. Layer 2 impacts extend to Shiba Swap, where liquidity pools now integrate burn voting, empowering holders to direct 10% of fees toward destruction. A democratic twist on tokenomics. Broader expansion includes partnerships, whispers with Web3 gaming firms, potentially onboarding 50,000 users by Q1 2026, while TVL, though dipped to $878,000, eyes recovery with these security nets. This isn't mere patchwork, it's architectural reinvention. The highway metaverse as the skyline, burns as the fuel. With 18 active developers ramping projects, the ecosystem's pulse quickens, promising a deflationary flywheel where every bridge built tightens supply and widens utility. For Shiba Inu, November marks not just a burn spike, but an expansion epoch, where chains link and dreams decentralize, setting the stage for a meme coin's maturation into a multifaceted force. The screen fades from glowing bridges to silent whale wallets. A single candle burns, steady, unblinking, and that's where the story stands. Every move matters. From billion token burns to Layer 2 highways, from corporate stacks to a meme-turned movement, Shiba Inu lives in the blockchain. 1 million or 1 trillion. Keep alerts on, eyes on chain. Believe. We are the news. Until the next whale, next burn, next moonshot, stay locked. Stay ready. See you beyond the chart. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.